our market monitor tonight says now is the time to take a look at economically sensitive stocks. He's John Traynor, Chief Investment Officer at People's United Bank's $5.5 billion wealth management division. John, welcome. Good to have you with us. You like cyclicals. Why? And why specifically in the face of a lot of slowing growth outside of the United States?
We like the cyclicals because we believe the U.S. economy is finally going to break out of this 2% growth that we've seen over the last 5 years. The second quarter was great. We think that will continue. So we think the third and fourth quarter will be close to 3%. So we're encouraged by the U.S. Economic growth. And we think Europe will see some positive news, not great, but positive news next year.
Let's take a look at some of the stocks that you're recommending to our viewers tonight. And at the top of your list, Capital One, the ticker symbol COF on the New York Stock Exchange. Why do you like it at $82?
We like Capital One. We've owned it for a while. We want to be exposed to financials. We're actually overweighting financials in our portfolios right now. Financials can do very well in a gradually rising interest rate environment, which is what we see next year. Plus, as you saw with the employment number, as jobs increase, consumer balance sheets will do better. So we think Capital One has the wind at their back right now from a credit quality standpoint. They've got a very diversified lending business exposed to credit cards, but a very diversified lending business. We like it quite a bit. It's trading at a nice multiple. We see good earnings growth next year.
Another financial is your second pick, Discover Financial, but you yourself concede that over the past 5 years or so, this stock has not done much. What's going to change?
We like Discover. We've actually owned Discover for the last 3 years. It's one of our longest held positions. Discover is about as pure a play as you can get on credit cards. Again, we like financials. Discover will do better as consumer balance sheets improve. They've done a great job of rationalizing their business. So we like Discover. You know, if you take a look over the last 5 or 10 years, stock hasn't done all that much, but we think it's poised for continued growth.
Past year looked pretty good. That was a nice chart.
Absolutely, absolutely. It's been a good holding for us. It's a nice steady grower. Very good name for us.
Okay, and you have a tech stock to tell us about, data storage company EMC, and this is a special situation, isn't it?
That's right. That's right. We like the fundamental business. We like their underlying business, data storage. We saw the news on J.P. Morgan this morning with security around their data. EMC is an important company that can help in that area. There's also, as your viewers will know, there's also some talk that EMC could partner with some other tech giants. We like the business, and we think a combination with another tech giant could make this an even better story.
Quick answer, John. Will the markets end higher than they are today at the end of the year?
Our target is 2,050 for the S&P 500, where there are other firms that are a little higher than us, but we think we're going to be moving higher, yes.
All right, John, thank you very much. Have a great weekend. John Traynor with People's United Wealth Management.